Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at inflection.
If you find our talks useful, please consider subscribe, like, and comment underneath. And definitely check out the VIP Algos link below in the description. We've got some great tools there for you.
Yeah, you really don't want to miss that one. But getting into things today, we've got a really fascinating company on the table.
We really do. And, I want you to just imagine this for a second. Think about a U.S. Navy destroyer, right? It's navigating this narrow, super heavily trafficked, potentially hostile strait.
Okay, high stakes.
Exactly, high stakes. And suddenly, the ship's entire GPS array just goes totally dark. Satellites have been jammed or spoofed by an adversary. No, a decade ago, that multi-billion-dollar warship is basically flying blind.
Right, sitting duck.
Yeah, but today, deep inside the hull, there's this microscopic cloud of atoms. And it's measuring the literal gravitational pull of the Earth to tell the captain their exact coordinates within inches.
It sounds totally like science fiction, I know.
It really does. But, our mission today is to look at the financials and the strategy of the company actually building those systems. The ticker is INFQ.
And what really stands out right away when looking at this data is how they're taking this frontier quantum tech out of the lab and turning it into immediate cash flow.
Which is huge because investing in quantum computing today usually feels like waiting for flying cars to be invented.
Yeah, exactly. The whole industry has suffered from that always a decade away problem. You've got these brilliant physicists doing groundbreaking theoretical work, but getting a commercial product out the door, generating actual free cash flow, that timeline has always been super murky.
Right. You're locking up billions and just praying for a scientific miracle 10 years down the road.
But inflection is fundamentally breaking that mold. I mean, they're not just selling this 10-year vision. They're selling physical deployed products right now.
So it's like they're building the high-tech tires today, selling them, and using that cash to quietly build the flying car in the background.
That's a perfect way to put it. Analysts call it a dual-track, full-stack business model. They're basically the only publicly traded pure-play company that spans the entire quantum ecosystem.
So not just the computers.
Right. No, they do the quantum computers, but also sensors, atomic clocks, RF receivers, and the software layer that runs it all. Track one is that long-term moonshot, building a fault-tolerant, neutral atom quantum computer.
Hold on. Let's put a pin in the neutral atom part for a second. We always hear about Google and IBM building quantum computers with those giant super-cooled superconducting circuits.
Yes, the gold chandeliers.
Yeah, exactly. So what makes the neutral atom approach different?
Well, it all comes down to how you trap the qubits. Instead of building physical metal circuits and freezing them to near absolute zero, a neutral atom system takes individual natural atoms like rubidium, and it traps them in a vacuum using highly focused lasers. The lasers act like these microscopic optical tweezers holding the atoms in a grid.
Oh, wow. Lasers holding individual atoms.
Right. And because these are naturally occurring identical atoms, they just inherently avoid a lot of the manufacturing errors you get with artificial superconducting circuits. It just makes scaling up to thousands of qubits a much more viable engineering pathway.
Okay, so that's track one. Using lasers to build a world-changing computer.
Yeah.
But track two is the near-term commercial side, right?
Exactly. They take the component tech they had to invent for the computer, like incredibly precise lasers and sensors, and spin them off as standalone products today.
But I've got to push back a bit here on the idea of commercial traction. Because, tech startups constantly brag about commercial success. But you dig into it, and it's like one university buying a unit for a basement lab.
Or a tiny government grant, yeah.
Exactly. Yeah. So how much of Inflection's business is actually real hardware doing real work out in the field?
Well, the breakdown is actually staggering. Looking at the numbers, 75% of their revenue comes directly from quantum sensing products that are already deployed.
Wait, 75%? Really?
Yeah, not a rounding error. And these aren't beta tests. These sensors are actively integrated and being used by the U.S. Army, the Navy, NASA, and the U.K. government.
Okay, that is a mature product line paying the bills. Let's go back to that warship example. The sensor calculates location based on gravity. If the GPS drops out, how does a tiny cloud of atoms know where it is?
Okay, so imagine holding a shallow bowl of water, and you're riding in the passenger seat of a car.
All right, I'm with you.
If the driver suddenly hits the gas or takes a really sharp turn, the water sloshes in the opposite direction.
Right, basic physics.
Exactly. Well, quantum sensors work on a very similar principle, just at a subatomic level. They use a cloud of those laser-cooled atoms. And these atoms are so sensitive, they literally feel the slosh caused by minute changes in acceleration or rotation, or even just the Earth's gravitational field moving underneath the vehicle.
That is wild. The atoms are literally the compass.
Yeah. By continuously measuring those microscopic shifts, the sensor calculates exactly how far and in what direction the ship has traveled since its last GPS ping. Perfect navigation without ever needing a satellite.
And obviously, with electronic warfare right now, that is totally mission critical. But the hardware is only half the story here, right? Because they also have a proprietary software called SuperStack.
Yep, Superstat.
And apparently JP Morgan Chase is actively using it. What is Wall Street doing with quantum software right now? We aren't cracking bank encryption yet, are we?
No, we aren't cracking encryption just yet. But Wall Street is super interested in combinatorial optimization.
Which means what exactly?
Think about a classical computer trying to balance a massive multi-billion-dollar portfolio, right? Right. With thousands of variables. It basically has to check every single combination one by one. Very slow.
Okay, got it.
Quantum algorithms can evaluate vast numbers of possibilities simultaneously. So JP Morgan is using SuperStack to translate their complex financial models into quantum language today. That way, as the hardware scales up, their algorithms are already perfectly optimized and ready to run.
So they're getting paid to build that bridge.
Yeah.
If they're pulling in cash from defense contracts and major banks, let's talk about the balance sheet. How does this translate to actual financial growth?
The growth curve is exceptionally steep. Looking at the historicals, they reported $10 million in revenue in 2023. By 2024, that jumped to $18 million. And in 2025, they hit $32.5 million.
So they're almost doubling year over year.
Yeah, and the guidance shows they aren't slowing down. Management is guiding for over $40 million in 2026. That's about an 80% compound annual growth rate over 3 years.
That's massive.
It is. But the most crucial detail is the quality of that revenue. Of that 40 million guidance, roughly 30 million is highly visible, contracted revenue from those deployed sensors.
Wow. So they aren't just crossing their fingers hoping to hit 40 million. They have the contract signed. And they're doing this with a 36% gross margin, which is pretty solid for complex hardware.
Absolutely. And as they ramp up volume for the military, operating leverage should kick in. Better bulk pricing, more efficient manufacturing, all of that.
Right. And you mentioned they're trying to expand those margins through miniaturization, something called PICs.
Yeah, photonic integrated circuits. A traditional quantum setup used to take up a whole room full of mirrors and super fragile optics. With PICs, Inflection is shrinking that entire room onto a single microchip.
Oh, wow.
Right. Instead of clumsy wires, a PIC uses microscopic pathways of light photons to control the atoms. It dramatically reduces manufacturing costs and makes the devices way smaller and more durable for military use.
But I mean, funding that kind of intense R&D is definitely not cheap. Which brings us to the most eye-popping number we've seen today. Their balance sheet is basically a fortress.
A literal fortress.
They're sitting on $443 million in cash. That includes about $84 million in available for sale securities. For a company doing $40 million in revenue, having almost $500 million in cash is just a staggering war chest.
It is arguably their biggest competitive moat. In deep tech, there's this notorious period called the Valley of Death.
Ah, right, where you prove the science works, but you don't have enough revenue to survive yet.
Exactly. Most hardware startups just die in that valley because they run out of money. Inflection's massive cash reserve means they can comfortably walk right through it. They don't do buybacks or dividends. Every dollar is aggressively funneled into R&D for those photonic chips.
Gives them total autonomy. They don't have to dilute shareholders to zero just to keep the lights on. But you don't build a $500 million cushion without some massive institutional backing.
Yeah.
The data outlines some serious government catalysts here.
Oh, massive catalysts. Starting in May 2026, the U.S. Department of Commerce's CAPS R&D office issued a $100 million letter of intent for milestone-based funding.
So a direct capital injection to build domestic manufacturing for those chips.
Exactly. But then an even larger development hit. In April 2026, Inflection was selected for the Missile Defense Agency's SHIELD contract vehicle.
Right, and we need to clarify this, because the ceiling for the SHIELD contract is listed at $151 billion.
Hmm.
Now, an IDIQ contract, indefinite delivery, indefinite quantity, that doesn't mean the government just handed them a check for $151 billion.
Right, no, it represents the maximum authorized budget for the whole program over its lifespan across all the participating vendors.
But just landing on that short list is a huge structural advantage.
Oh, definitely. It basically removes procurement friction. They have a hunting license for specialized task orders that outsiders can't even legally bid on.
And that government spending is being mandated from the top down right now. Because, looking strictly at the business policy side, President Trump signed 2 executive orders accelerating quantum tech.
Yeah, and crucially, those orders mandate that commerce, defense, and energy deploy quantum-enabled sensors within a strict 5-year time frame.
And looking at that purely neutrally, just as a business catalyst, that is a massive tailwind. When the executive branch says deploy this in 5 years, it completely forces the bureaucracy's hand. Procurement officers have a quota to hit.
Exactly. It takes it from an experimental side project to a mandatory deployment. Plus, there's the recent launch of America's Quantum Space Initiative. They're partnering with Voyager Technologies, Armada, and CU Boulder to take this tech into orbit.
Space is the ultimate GPS-denied environment. If a satellite gets targeted, you need autonomous navigation. But let's bring this back down to Wall Street. How is the market pricing all this growth?
Very enthusiastically, the stock recently surged over 12%, closing at $15.96, reclaimed some critical moving averages, and Barchart reports a consensus strong buy with a $21 mean price target.
So about a 30% upside. But let's talk about the valuation metrics for a second, because I'm sweating a little bit here.
Let's hear it.
They're trading at roughly 99 times price to sales. That multiple requires flawless execution. So what's the bear case here? If they stumble, that multiple is going to compress violently.
Yeah, the valuation premium is undeniably the primary risk factor. At 99 times sales, investors aren't just buying a defense contractor making gravity sensors. They're paying for the eventual world-dominating success of the neutral atom quantum computer.
Right, if the computer fails to scale, the tech moonshot premium disappears.
Exactly. The stock would re-rate as just a hardware manufacturer, and the price would crash. There's also the dependency on the U.S. government budget cycle.
Oh, sure. Government shutdowns.
Right. If there are political standoffs or defense spending reviews, contracts could get delayed and near-term growth could just stall out.
Wall Street hates uncertainty. If a deployment gets pushed back 2 years, revenue defers, and that 99x multiple suddenly looks terrifying.
It does. But again, you have to look back at the balance sheet. If a contract is delayed 6 months, inflection isn't going to face a liquidity crisis. That $443 million cash reserve is a massive shock absorber against those inevitable execution delays.
So synthesizing everything, the 80% growth, the actual deployments, the fortress balance sheet, and the valuation risks, where do things ultimately land?
The overarching analysis calculates an 8.5 out of 10 bullish score for the stock. The view is that it has a really strong long-term outlook. The thesis is basically that the market fundamentally misunderstands them. Most investors think all quantum stocks are pre-revenue science projects.
But inflection has immediate contracted revenue.
Right, anchored by an unshakable balance sheet with massive asymmetric upside if they crack scalable quantum computing.
It's honestly a masterclass in building a deep tech company. You monetize the byproducts of your research today. You build practical products that solve an urgent problem for the military, and you force the tech to pay for itself while you invent the future.
It really is the ultimate strategy for surviving the deep tech valley of death.
Absolutely. And, before we wrap up today, I want to leave everyone with a final thought to ponder. If Inflection's quantum sensors are successfully providing navigation for U.S. warships today using tiny clouds of atoms, how long until those photonic microchips shrink the tech down even further?
That's the real question.
Right. How long until it's cheap and small enough for commercial airliners or self-driving cars or even the smartphone in your pocket? The massive quantum revolution might not start with a giant supercomputer in a lab. It might just start with your phone knowing exactly where you are down to the millimeter, even when the satellite signal disappears entirely.
A fascinating future to watch.
It really is. Remember, if you find our talks useful, please consider subscribe, like, and comment underneath. And don't forget to click that VIP Algos link in the description. We'll see you next time.